Hi everyone, so let's now check out some of the longer term borrowing methods that you need to be aware of. Okay, first up, let's start up with a hire purchase. So when it comes to a hire purchase, this allows immediate use of a vehicle or machinery which is paid for in regular installments, as we can see here in the definition. Now, this is good because it spreads the cost, of course, and these items, such as a brand new car, can be very expensive. So here, paying in installments means that can be very, very beneficial. There's also this buy now, pay later aspect to a hire purchase agreement, as there is to credit card purchases. So you buy the good now, you get the use of the product right now, but you pay later. Okay, there's another way to think about that, and that is short-term gain, long-term pain. Yeah, okay, so that is that you get the gain of the actual item itself, but then you've got the longer-term pain of having to pay for that in frequent installments. Okay, right, so you've also got to be careful on the interest charges that are actually available. Sometimes they can be very competitive. DFS, for instance, often offers 0% APR on sofa purchases. Okay, but at other times they can be quite expensive at 7, 8, 9% APR. So an interest rate of that sort of level is quite expensive, particularly when you compare it to perhaps a personal loan. Okay, and the asset ownership belongs to the actual seller until you complete that final payment. So you don't own the good until you've actually paid that final installment off, and then it's finally yours. All right, so often, of course, hire purchase agreements are used for buying cars. That's the most frequent use of them. But you may well want to check out what different dealers are actually offering. So have a look on the Mercedes website, have a look on the Ford website. What can you find about various different car products and the actual hire purchase agreements that are available? Okay, let's now have a look at personal loans. Again, when it comes to loans, you may want to compare some of the big banks and how competitive the loans that they offer actually are. Something else to consider is just comparing the loans against the hire purchase, because if you're obtaining a loan to buy a car, well, which is actually more affordable for you? Okay, so it provides the ability to borrow a set amount of money, which is of course repaid in regular installments with interest. Okay, so you've got those regular pre-agreed payments as we have for a hire purchase, and this enables you to really budget very, very nicely, as does the hire purchase agreement. So you know how much is actually going to come out each month, and that is going to be a set amount. Okay, now it's useful for very specific purposes. So for instance, of course, buying a car, but it could also be in other areas that perhaps you want to buy a new asset that you're interested in actually obtaining. Okay, now there's lots of different ways that you can choose to use a loan there. Okay, now the downsides, sometimes you need to have some sort of form of security. It really depends how much you want to borrow here. But that secured asset, we can see here, asset ownership belongs to the seller until that final installment is made. But here, if you don't have it secured against anything, you're more likely to pay higher interest rates on it. Okay, there's also the fact that this is more of a medium-term source of finance, as this is. So really we're looking at a period of say 3 to 5 years or so for these different types of finance, although of course you can take out a loan for as short a period as 1 year perhaps. Okay, so let's move it on now for mortgages. Mortgages, these are super long term. Okay, so what I've done once again here really is focus on the fact that these are more medium term sources of finance, and this is actually long term finance for an individual. So this is of course a long term loan to fund the purchase of a property. The crucial point, however, is that it is secured against the value of the asset, and that is the property. So when you actually own a mortgage, or when you own a house via a mortgage, imagine you buy a house for £250,000 and you have a mortgage of £125,000. Okay, if that is the case, then you will have to pay interest and repayments on that £125,000 for probably a term of 20 to 25 years before it's fully repaid. Okay, so this enables you to actually spread the cost of expensive purchases, and it gives you a choice as well. There's a few choices. So the most common ones are fixed or tracker rate mortgages, but there's many others such as variable rates. So a fixed rate is where it's fixed at a given rate, usually for 2, 3 or possibly as long as 5 years, and thereafter it will revert to the bank's variable rate, which can be rather uncompetitive, so watch out for that. Now, alternatively, you could have a tracker. Having a tracker means that it will track the Bank of England's base rate. And the Bank of England's base rate is, of course, right now, as in April 2018, at 0.5%. Okay. So, yeah, those are the main sort of advantages regarding this. But there's one further point, and that is, of course, that given that you are securing this against an asset which doesn't usually fall in value, not like a car, where you know the car is going to depreciate in value, then it means you can often get mortgages at much cheaper rates, okay? So for instance, perhaps 2%. And I really suggest, once again, you have a look at some of the big banks. What sort of mortgage products are they offering? What sort of interest cost is involved? How does that compare against personal loans, and so on? Okay, so other downsides, yeah, interest rates can actually vary. Even with this fixed one, it might only be fixed for a 2-year sort of teaser rate and then track a variable rate, which might be quite uncompetitive. So you might have actually bought into it because of that initial 2-year period, but then you're paying 23 years off at a higher rate. Okay, so watch out for that. Failure to meet payments can lead to repossession of your house, of course. All right. So great information here. Really, really useful for your personal finance exam. I hope you've enjoyed that as much as I have there, guys. Thanks a lot.